The pound continues to strengthen against the euro, with 9 out of the last daily candles on the IG platform red for euro sterling. Meanwhile, cable is at a 3-year peak, having breached 140 on Friday, the highest level since April of 2018. So where next for the pound? Joining me to discuss is Justin McQueen from DailyFX. Justin, good to see you. So we've seen cable hit a 3-year high. What's been driving this recovery for the pound?
Hi, Victoria. Thank you for having me. What I would say about the pound is, of course, it's had a stellar 2021. And I think, there's a couple of reasons behind this. Firstly, with Brexit now in the sort of the back window now, that massive political risk premium that's been there for the pound for the past 4 years, that's now been removed for the pound, helping drive those gains. But also as well, as we start to come out of this pandemic, of course, we've had the vaccine rollout and a relatively rare success for the UK government. And given the fact that we've outperformed pretty much our major counterparts, of course, we've seen the pound continue to outperform. So we take a look in terms of the chart, in which we have seen, massive gains over the past couple of weeks. Of course, we're now trading at 140. However, the one thing I would say, probably on the technical front, we are trading at pretty much overbought levels in terms of the RSI at about 74. So would I say that this is now an attractive level to get in? I'd probably say not. And for me, I'd probably wait for a bit of a pullback before you can start to re-engage in some longs into the pound, particularly against the US dollar. But one thing I would say is that, with this move, there's not really too much in the way of resistance until that sort of 2018 double top, roughly around about sort of 143.50 to 70.
So in terms of this move, particularly for cable, how much of it is a pound strength story and how much of it is a dollar weakness story?
One thing I would say is that, with the US dollar weakness, of course, we've seen a fair bit of US dollar weakness throughout much of 2020. That did start to abate slightly at the beginning of January, given some of the moves that we have seen in the bond market, lending some support to the US dollar. But on the whole, I'd say a lot of this is part of the sterling strength. I think really, if you look across the board for the pound across its major counterparts, you can really sort of see sterling, trading at pretty much overbought levels across the board. And one thing that's had our eye, we've had our eye on for quite a while, has been euro sterling, and that trade has really been the sort of the barometer for Brexit throughout the past 4 years. But now that that's those hedges are now being unwound, that uncertainty now creeping out of the pound. Of course, we've continued to see downside in euro sterling, but also as well, one thing you can say, like I mentioned before, is the vaccine trade's pretty much been in full swing. Something we've been covering a lot on DailyFX, and euro sterling has continued to push lower, trading at pretty much the lowest levels, since around about March 2020. Do I think the pound can continue to strengthen against the euro? Yes. In terms of levels to look out for, really now is just slightly below 86, but I don't see why not. We can't get back down to 83.50 in terms of euro sterling. But one thing, again, like I would say with the pound at the moment, we are trading at very much overbought levels. So you can expect a little bit of a pullback in some of this sterling appreciation, a bit of profit taking before the next wave higher in the pound.
You mentioned in your answer there about the bond market, and we've seen quite a lot of interest towards treasury yields and the yield curve over the last few weeks. The US treasury yield now at the highest level in a year. How's that likely to play out in terms of the greenback?
The one thing I would say with regards to the fixed income market in terms of how it's really been playing out in FX, I think it's really a trade that you can see quite clearly against the Japanese yen. The Japanese yen's been weaker across the board. A little bit of risk on sentiment as well has continued to weaken the Japanese yen as well. But in terms of the dollar, yes, the dollar has been, remained relatively weak against its major counterparts, with the exception of the Japanese yen. And really for that trade, throughout the continued push higher in US rates and also global bond yields in general, actually, it's really been played out at the Japanese yen. And should we continue to see US yields continue to push higher, then I would expect the Japanese yen to come under further selling pressure. But for me, I'd probably say the best way to trade that would be through cross yen, and particularly with some of those strong currencies, with the likes of the pound. I don't rule out a move in the short term towards 150 in sterling yen.
Now, we've also seen commodities like copper and nickel surging lately, pushing commodity currencies higher as well. What have been some of the key forex beneficiaries?
So I think in terms of the commodity market, this sort of buzzword that people are coming up with, the commodity super cycle, and of course, across the board, oil, copper, like you said, we've seen, massive amounts of gains, expectations of record high levels for the likes of the copper market. And in terms of the play for that, typically you look at your currencies such as the Australian dollar, which has been a major beneficiary of the move in commodities, and also with oil prices as well. For example, the Canadian dollar very closely linked to the oil market, and therefore, with this move higher in the commodities market, I do expect to see further gains in the likes of the Australian dollar. I think really for that pair, the real level now is that 80 handle. We have moved above the 79 handle, so really for the move higher, that 80 handle will be looked at quite a bit by the market, and particularly given the fact that we've continued to see this rise in copper and also iron ore as well. And keep in mind as well that the RBA, they did say that if it wasn't for their policies that they have done recently, and also extending their QE program, the Aussie would not have been, Aussie would be basically 5% higher than it currently is, based on the terms of trade for the Australian economy.
All right, Justin, it's been great to chat to you. Thank you so much for all of your analysis, as always. And that was Justin McQueen joining us there from DailyFX. I'm Victoria Scholar, and thank you so much for watching IGTV.
For more videos like these, subscribe to our YouTube channel, IG UK, and make sure to follow us on Twitter. We're at IGTV.